Hello, I'm Chris Brown, Fleet Group Editor at Bobit, and welcome to the next episode of Fast Forward Interview Series. In this episode, I interview Karl Brauer, Executive Analyst at iccars.com. We talk about truck and van trends. We talk pricing, volume, demand, and market share, and how these factors will affect the year ahead. Well, thank you everyone for joining this edition of Fast Forward Video Series. I'm on with Karl Brauer, Executive Analyst at IC Cars. Karl, nice to be with you today.
Hey, great to be on with you. Looking forward to the discussion, Chris.
Excellent. Well, anytime I can get Karl talking to our audience, you know it's going to be about pricing, volume, demand, market share. So let's just get right into it. Let's zero in on the pickup market, that half-ton pickup market, the F-150 Silverado, Ram 1500 market. Why don't we start with trends in pricing? What are you seeing there over the past year and moving forward?
Yeah, it's been interesting because, when the pandemic started, we saw a lot of demand for trucks. Like their prices were the first segment to shoot up as soon as the, initial lockdowns semi-lifted in the summer of 2020. And trucks went through the roof. And I think that was because a lot of people feel more confident and comfortable buying a truck when they feel like the world's going a little sideways. But they went up and they stayed up, and really they didn't come down until the past year, because I think first gas prices made a lot of people start to question buying something that was not necessarily as fuel efficient as a smaller vehicle, but also interest rates. A lot of trucks, the average price of trucks is not low. And so a lot of people buy them on loans and finance them, and suddenly became far more expensive. So you have more expensive to buy and more expensive to operate because of the last year's circumstances. And we saw pricing, peak in the first quarter of 22 at over $45,000 for trucks, and then it's just been dropping ever since. It went to 44,765, 44,257 in Q3, and then the final quarter of 22 it was 42,445. So
Okay, yeah.
yeah, so a consistent drop in pricing the last three quarters of 22. We'll see what happens in Q1 of 23 in another few weeks here, but clearly there was not enough demand or there was enough supply, both together, to not support the higher prices that we'd seen for trucks throughout much of the pandemic.
Sure. I wonder if any sort of economic conditions too. I mean, particularly as it relates to fleets. I mean, we can look at housing starts and
Right.
areas like that.
Yeah, and if you're a fleet operator, just like consumers, if you're a fleet operator and you're buying these vehicles through financing, or you're wondering what your next year's revenue is going to be with economic concerns increasing in a lot of areas, you may have cut back on a previously planned fleet investment because you're not sure how much money you're going to be bringing in maybe in 23.
Yeah, I mean, I guess we can look at this as a positive too. In other words, for fleets that couldn't get their hands on trucks before, the availability is loosening up and pricing is just not so astronomical.
Yeah, if you're in the market now, it's already better than it was 6 months ago to buy almost any vehicle, including a truck. And it may get better still over the next 6 months, but you're already off these peaks that we were seeing for 2 years in a row where everything was just crazy up and not showing any sign of coming down.
Sure. And for trucks, pickup trucks, I mean, market share is not necessarily demand, but what is market share? How's that been trending?
Yeah, that was interesting too, because it also peaked at the first quarter of 22 at 18.6%, and it fell 17.2 in Q2, 17.8 in Q3, it went up a little bit, and then 16.3 in Q4. So not surprising that somewhat pricing and market share are tied together. If market share is dropping, that's a drop in demand, and if pricing is dropping, that usually reflects a drop in demand. So we saw them both happening.
Sure. And I mean, just to close the loop on trucks, in terms of what these trends look like for 2023, any learnings there?
I think we're going to see a lot of pressure on businesses. We've seen a lot of layoffs, obviously, in the last 2 months. And so I think 2023 will be probably a regrouping year for a lot of industry and businesses. We're also seeing housing starts, of course, off, and we may or may not see those start to return. But all of these things are tied together. And if you've got economic concerns, business concerns, housing start drops, those kind of things, I think as a company, you're going to just be that much more cautious about how you invest your money. And that's going to reflect in everything, including fleet investment.
Sure. Yeah. And I think let's just turn to the van market, which from a business perspective has a lot of the same pressure, but
Mm-hmm.
perhaps we can just start with a look at, pricing or, on the van side. Just
Yeah, vans were interesting because they did the same thing on the pricing as trucks in that they peaked in Q1 of 2022 and then fell consistently, from 43,901 to 43,844 in Q2, 43,411 in Q3. So still really, really flat, all within like $500 of each other. And then 42,358 in Q4 of 2022. So just like we saw pricing take a big jump, a big drop on truck side, we saw it take a big drop on the van side in that last quarter of 22. And I think that's when people were getting worried. And it's interesting because, a lot of people on the fleet side will make last minute or relatively last minute annual purchases at the end of the calendar year to get tax benefits. So you would potentially expect to see more volume and or more price hikes, as people rush to get their tax benefits at the end of a calendar year. But we didn't see that with the vans and the trucks. So again, I think the concerns over the economy outweighed the desire to maybe save some money in tax harvesting or tax purchases at the end of the year.
yeah.
Yeah. So now the market share, but here's where it gets interesting, Chris, is market share for vans, I'm looking at the numbers, was different than trucks. It started out at 0.7. Vans are are a very small part of the market, but
Yeah.
relatively speaking, they started out at 0.7% in Q1 of 22. Then it went 0.8 Q2, 0.9 Q3, and 1% market share in Q4. So literally just steps staring up every quarter, even as these economic conditions were coming in and the price was dropping a little bit. So to me, that says that there's economic pressure keeping the price down, but there's still not enough vans. That's an underserved customer out there. Van customers there are not enough of them. And so there are, relative to the rest of the market, there are more people trying to buy vans out there than other cars, and they're gaining market share.
And would you say that relativity is going to persist through 2023?
I think so. My suspicion is that there's been kind of a paradigm shift, and vans have become more valuable to the market in general, and that's why you're seeing the market share go up on them. I think people are finding them, really functional and useful for a lot of today's purposes, and of course they're better than they've ever been. You look at vans from even just 10 years ago and how much they've evolved and how much better they are today. So I think a lot of people are choosing to leverage vans as much or more than other types of vehicles, maybe like SUVs or trucks. And the market needs to now respond because the market share is going up for them.
Yeah, I mean, I think we have to look when we look at the van market, the small van market, and the abandonment of that market with the ProMaster City and the Transit Connect, et cetera, going away, Metris, Mercedes Metris, that's got to it's definitely raising some eyebrows on the fleet side. Where do we go from there,
Yeah. And I think utilitarian vehicles in any shape or size, trucks, SUVs, and vans, I just think in general, they continue to be seen as really valuable. It's why cars have vanished, because people are like, if I'm going to buy something with four wheels anyway, why not get something with as much functionality and flexibility as possible? And that's why cars have essentially died over the last 20 years, and all utility type vehicles have overall gone up in market share and in popularity and price.
And this good segue, right? I want to touch on just the car market and then maybe just get into how EVs factor into all this. But so on the car side, I mean, there's different segments in the car side, right? You got luxury, you've got like your sort of sedan market, your Camrys type thing, any stratification there in pricing. I mean, let's face it, we've seen pricing go through the roof in general. average car cost has just been crazy. But let's drill down on some segments there.
Yeah, what's fascinating about the car market is that every segment of the automotive market, trucks, SUVs, and cars and vans, they all went up in value substantially during the pandemic. There just weren't enough. Now they went up at different times. The trucks and the coupes, believe it or not, coupes and trucks, two different ends of the spectrum of the vehicle market went up, and it was because people wanted the functionality and maybe the security they got with trucks as the pandemic started and they were getting scared. And then coupes went up because people were stuck in their houses. They couldn't go anywhere. And they couldn't go to movies, they couldn't go to restaurants. But the one thing they could still do is they could go out and drive by themselves or with their family members. So a lot of people said, if I'm going to go out and drive as my only form of fun now, I'm going to get the most fun thing I can drive. And things like Camaros and Mustangs and Challengers and other coupes went up in price as a result. Eventually, the whole market went up in price because then people started realizing, well, I want SUVs, and then even economy sedans, which had been weak for years, went up because the price of gas shot through the roof over a year ago, and then that market got dragged up. Yeah. What we're seeing now is kind of the same thing. There is not a universal drop in vehicle pricing. There's spottiness. There's some segments that are still holding up and they're expensive and don't show signs of coming down yet. Others that have definitely dropped. And what we're seeing, not surprisingly, is a lot of it's based on kind of the demographic who buys them. Luxury buyers who are buying things like Porsche 911s or Cadillac Escalades or Mercedes-Benz GLS, big, three-row SUVs. Yeah. Those are holding their value really well. Why? Because that segment isn't really concerned about interest rates and inflation. But, Toyota Camrys and RAV4s and the Ford Mustang, those are all dropping in price because they're, standard cars and they're bought by mainstream consumers, and those consumers are much more worried.
Hey, let's just kind of finish up on EVs. I mean, we can maybe start in on, EV pickups. It seems like there's a lot of pent-up demand just simply because of supply, and yet those EV pickups are shooting up in price from when they were originally announced. I mean, what's going on with that dynamic?
Yeah, an EV pickup thing is really just a matter of kind of like most EVs in general. They're just high priced, but they're holding those values because the relative supply versus demand is keeping those prices up. And we're going to see what happens because I think price sensitivity is going to spread from maybe middle or lower income people to higher upper middle income and maybe even premium buyers. Potentially, if the economy continues to, kind of be a little shaky. We saw a lot of layoffs in tech companies and all. So if you're selling an electric car right now, you may not be feeling it yet as an electric car manufacturer. But, Chris, look at all these tech jobs that got laid off. Those are some of the primary buyers. Those are some of the primary Tesla buyers or other electric vehicle buyers. And are they going to be as confident to go buy their next electric vehicle after what's gone on in the last 2 or 3 months with all these layoffs? So that's going to be interesting to see. And of course, trucks specifically, I still worry because they seem to have great numbers when you look at the range of like an F-150 Lightning, but then you hear all these real world tests with trailers and all, and the range falls in half. And so I wonder how many electric vehicle or electric utility vehicles overall as we go forward will make sense for which uses. And I always feel like short routes in urban areas where you come back to a home base where you can have electric vehicle chargers makes perfect sense. That's the best use of an EV. Reduced emissions, reduce noise in an urban environment. Going long distances with heavy loads, that's harder to envision those vehicles making sense to me.
We'll leave it at that, but I think where we should circle back around in a year, let's say, is we may be facing a recession, a mild recession, but a mild recession with a release in some volume with EVs when charging infrastructure isn't quite in place may put some downward pressure on EV pricing and just whether the demand is there to swallow up these vehicles.
Yeah, I think you have a lot of first movers who love to be, first on the blockers with various models on the EV side, but that market will eventually get all their cars. They'll be sated. And then you got to start selling to mainstream consumers. And whether it's the price of EVs relative to non-EVs or the economic concerns or both, that could really start to get tough when you have to expand beyond those kind of bleeding edge first mover people that are happy to spend the money on an EV.
Sure. Well, that's great, Karl. And it gives us something to talk about a few quarters from now. But listen, hey, thank you for joining us on this edition of Fast Forward video series.
Great being on with you, Chris. Thanks for having me on.